Well, we see markets rally this week and hitting new record highs. We're also seeing gold get a bit of a bid as well. For a look at the technical view of the markets, let's now bring in Parets. He's the president and founder of All Star Charts. JC, nice to see you today. Thanks for your time.
Of course. Thanks for having me, as always.
Let me first get your take in terms of the broader markets and how what we've seen, this nice rally, dovetails or not with your previous expectations.
I mean, listen, you know, most of the major markets, the S&P 500, the Dow Jones Industrial Average, look at the Global 100 Index, they're flat since January of 2018. A nice, healthy consolidation after a tremendous historic, you might even call it, 2016 and 2017. So a correction that lasted, what, 17, 18 months, I think is perfectly normal and healthy for that matter. And we continue to press up against new highs. To me, that's evidence of accumulation. And I think ultimately we do break out. And I think we see all-time highs in all of the major indexes, S&P 500 and Dow. And we're seeing it globally as well. Look at Switzerland breaking out to new all-time highs coming out of a 12-year base. I think that's a great indicator for what's to come in European equities. We're seeing rotation into emerging markets. So all of that rotation, in my opinion, is healthy for the stock market overall moving forward. We want to be buying stocks.
When you do take a look, that's interesting about emerging markets and also Europe. Are you seeing much confirmation of that move, of that rotation?
Well, we've came into the year looking for a weaker dollar, right? That was a big thesis of ours. And a weaker dollar, in my opinion, meant rotation into Europe and emerging markets. And while we haven't necessarily seen that, we have seen some of the implications of a weaker dollar all year long. And now that the dollar's falling apart, now I really think it's going to get going. And I really think money starts flowing into both emerging markets and Europe on a relative basis. It doesn't necessarily mean that U.S. stocks aren't going to participate. I think they all participate, and I think we get catch-up from some of the areas around the world that have been underperforming. I think those are part of the bigger implications of a weaker dollar.
What would be the implication then, of course, to the Canadian dollar?
Well, you know, if the U.S. dollar's going lower and Canadian dollar's going up, to me, that's evidence of accumulation in commodity, natural resource-centric areas. So we're seeing a mean reversion in energy stocks. We're seeing a breakout in gold and gold mining stocks. Doesn't that remind you of Canada?
Right, definitely, and it's definitely helping our market as well. Let's take a deeper look, though, at gold, and more people have been obviously looking at it. But how strong is the momentum, that upward momentum we've been seeing in gold?
I mean, listen, you could have been practically in anything over the last 7 years and made money except for gold, right? It's just been left for dead. And part of our bearish dollar thesis coming into the year was, you know, obviously precious metals would benefit from that. And think about it. The dollar hasn't even gone down much this year. It's pretty much been flat. And gold has been doing very well in that environment. So to me, I look at that as relative strength in a sort of an environment where we shouldn't really be seeing that. To me, that's further evidence of accumulation. And I think that if gold futures are above 1380, I think we have to be long, and I think the next stop is 1600.
And when you take a look at gold on an even longer term basis, what's the timing here in terms of reaching some of these targets?
I mean, listen, I think it's happening now, and we've seen major moves in precious metals in the past, and when they happen quickly. I mean, look back to early 2016. I mean, talk about a rip-your-face-off rally. Shout out to Frances. Her and I used to do a lot of BNN together. She used to love it when I would say that, and it's true. We had a rip-your-face-off rally in precious metals and gold mining stocks in early 2016. I see no reason why we can't see something similar, especially if the dollar falls apart, and I think it's got a good chance to.
What about silver? And I don't know if you look at SLV, but what are you seeing there?
I'm seeing frustration from silver longs that gold is doing so well and silver's not participating as much. So that must be awfully frustrating. But, you know, to me, historically, when precious metals are doing well, silver tends to outperform over time. Depending on who you ask, sometimes silver lags at turning points and then plays catch up. I buy that thesis also. But think about it. If precious metals are doing well, dollar's falling apart, silver's going to do just fine. If you talk about the SLV, to me, $14 on the SLV is my level. level. If we're above 14, I think you could be long all day long, and I think it's going to the 20s.
Away from that, what about some of the base metals? What are you seeing there?
You know, if the dollar falls apart, right, and we do get that rotation into emerging markets on a relative basis, copper's going to do well, right? People talk about Dr. Copper and all this stuff. Copper doesn't move with S&Ps and developed markets. Copper moves with emerging markets, right? So if we're going to be right on the emerging market rotation thesis, copper's probably going to do really well in that environment. Aluminum's at a really interesting point right now. If aluminum's above 1,700, I think you could be long there. So there's some interesting rotation that we're seeing. We just want to see in the next couple of weeks downside follow through in the dollar, and if we do see that, I think the rest of the story will play out as well.
You know, it's quite amazing though with respect to the U.S. dollar. I mean, obviously the Fed this past week, really played into your thesis in terms of that weaker U.S. dollar. A lot of people though had been actually quite positive towards the U.S. dollar. What kind of confirmation as it relates to volumes are you seeing on short U.S. dollar?
You know, when it comes to the Fed, we have never seen any evidence whatsoever that the behavior of the Federal Reserve and the U.S. dollar have any sort of correlation at all, right? So to us, you know, the evidence suggests that it's just really noise, you know, for people to gossip during the day, which is fine. But when you're actually trying to allocate assets, you really can't worry about what people are doing or thinking. You need to look at the behavior, right? And this 98 level in the U.S. dollar index, to me, is the story of all stories. If the dollar, regardless of what the Fed's doing, right? We're not worried about that. That's the level, 98 on the U.S. dollar index. If we're below that, I think it's good for gold. I think it's good for emerging markets. I think it's good for stocks overall. And I think it really has a lot to do with the dollar. Historically, that hasn't always been the case. We've seen negative correlations and positive correlations between stocks and the U.S. dollar. But currently, where we are in the current cycle, if the dollar falls apart, I think that's going to be good for a lot of assets. And I think the higher probability outcome is that that does happen, yeah.
And just going back to gold for a moment, you're looking at the junior gold miners as well, are you?
Listen, when gold moves, right, the worst ones, like the smallest micro caps, those are the ones that do the best. That's where the juice is. They're like call options, but in stocks, right? So if Newmont Gold is going to go up 30% or 40%, some of these juniors will double or triple, right? So they really, really move. So I think depending on what your goals are, what your objectives are, what your time horizon is, I think it pays to take a look at some of the little guys where the beta really lies. You know, if you have to put $100 billion to work, and many people out there do, believe it or not, you can't play around in these little guys, right? You got to be in the Newmonts and in the big ones, right? But if you're a listener at home, or you manage maybe a small cap portfolio or whatever it is, some of these juniors, if precious metals are doing well, these things are going to be 3, 4, 5 baggers for sure.
Outside of so you're long gold, you're long the junior gold miners, you're short the U.S. dollar, and you're long the broader equity markets, the major indices, correct?
I think the path of least resistance is higher. When you look at Bank of America just came out with their data in terms of like what money managers are thinking and doing. You know, AAII, if you follow those, you know, there's a lot of data out there, sentiment data suggesting we are at very bearish levels. People are like as bearish as we've seen in over a decade. So think about that. People are so bearish out there, and the stock market's making all-time highs. Is there a better combination than that?
It's a good point. How aggressive would you be though at this point? And where does seasonality come into play a little bit?
Well, for us, seasonality, we look at it after the fact, not ahead of time, right? So we want to look back and be like, well, did the market follow seasonal tendencies, or did the market ignore seasonal tendencies? And what we've seen over the last couple of years, the market continues to flow with the way seasonality goes. So for us, it's when it diverges, right? If stocks are supposed to do well in a certain period and they don't, that's a heads up that something's wrong. If the market is supposed to do poorly, like it is from May through the end of October, for example, right? Sell in May and go away.
Yeah.
If the stock market does well during this period, that's evidence of strength, right? And that's further evidence that we're on the right track. And so if we're above, let's say 27,000 in the Dow, I think the next level's 30,000. In the S&P 500, if we're above 2960, 2970, I think we can go to 3,300. I think there's a lot of upside, Catherine.
Wow, that's a lot of upside in the S&P 500. What time frame?
Well, now. I think it happens now.
Okay.
I think pessimism is super bearish. Maybe this isn't the breakout that we've been waiting for since early January. Maybe we have another month or so of churning, but the more times the level is tested, the higher the likelihood that it's going to break. So I think it's happening soon.
Okay, we'll leave it there. JC, nice to see you. Thank you.
Yes, thanks again as always.
That's JC Parets. He's the president and founder of All Star Charts.